How you doing? I'm Big D. What I want to talk about today is the largest transfer of wealth in American history. This is what I've started to research years ago, and this is more of a reality today than it has ever been. So let's talk about this transfer of wealth and maybe who's going to receive this and how do you position yourself. And what I'm telling you right now is with absolute certainty that what is about to happen is bigger than anything we've ever seen. I know as far as I've ever seen, and I'm pretty old. So $4.7 trillion is about to flood the market, the US economy, starting very soon. This is not a typo. It's $4.7 trillion. 90% of investors have no idea it's coming. Wall Street knows. The smart money is positioning right now. And the people who understand what is happening are about to multiply their wealth while everyone else sits wondering why they missed it. Now, this isn't the next Google, next Bitcoin. This is much more than that. This is not a political statement either. I don't care if you love Trump or hate Trump. What I care about is the money, your money, and whether you are going to be on the winning side in this or losing side, because history shows us exactly what happens when this much capital hits the market this fast. If you are not positioned correctly, you are going to get left out. You're going to get left behind. Now, before I break down exact timeline, the 5 waves of capital flow and 6 sectors that are going to absorb this first money, I need you to do me one favor. If you are serious about what I'm about to talk to you about today, please subscribe. And if you want to know more in the future about silver, gold, things like that, maybe some crypto, I do have updates on a regular basis. And smash that like button. Leave a comment. I would leave a comment for you if you'd leave one for me. Joining this community, because what I'm about to share is not theory. This is actionable intelligence based on my research, and I do believe I am very, very close to being 100%. I do believe this is legit. Now, this comes from multiple people that I respect, and I've been watching and researching for a long time. Now, take it for what you will. I am not a professional. See my disclaimer in the comment section. Here's what most people miss: Trump's 2025 tax cuts, the Job Act 2000 2.0, was not just about lowering taxes, it's about timing. The bill passed March 2025, but the impact hits in 3 massive waves. And each wave creates different opportunities for investors who know what to look for. Wave 1, between April and June 2026, tax refund season, and they are pulling it forward this year. It starts at the end of February, the earliest in history. Wave 2, July through September 2026, corporate, excuse me, repatriations. This is when companies bring overseas cash back to the United States. Wave 3, fourth quarter 2026. Bonus depiction, depreciation. I'm sorry. I have a cold and I'm just trying to unbury myself. Depreciation, bonus depreciation, and capital expenditure. companies spending massive amounts on equipment and infrastructure. Now, let me break down exactly why this matters. According to Congressional Budget Office and Treasury estimates, individuals are getting $1.2 trillion in tax refunds. That is $8,500 per household. It's not exactly what you're going to get. I'm just saying this is the average from the top dog all the way down to the little guy. Now, if you're someone who has to pay in every year, maybe you're going to get something this year, but you're probably not going to get the 8,500. But the average is $8,500 per household. Corporations are getting 2.1 trillion in corporate cash reparations from overseas, and businesses are getting 1.4 trillion accelerated depreciation for investments. The total flowing into the economy is $4.7 trillion in just 9 months. Let me put that in perspective. I need you to understand the magnitude of what I am talking about. 4.7 trillion and is 3 times the size of the 2008 bank bailouts. I don't know if you remember that. A lot of that was hush hush, just like any kind of bailout that's going on nowadays. There's not a whole lot of detail that is released. They don't want you to know. Want you to run to the bank and pull out your money, that kind of thing. So the coal package was half this size. This is literally 20% of the entire U.S. economy hitting the market in 9 months. We have seen this playbook before, just not at this scale. 2017 tax cuts. What happened? The S&P rallied 28% in the next 18 months, but that was only 1.5 trillion. Now this is 3 times larger. The Bush tax cuts. Small caps went up 47%. The real estate investment trust went up 38%. The Reagan cuts in 1981, the Dow went up 135% over the next 5 years. But here's the critical difference. In 2026, we have record low unemployment. We have a Fed that is already cutting rates. We have pent up consumer demand. This is not recovery. This is rocket fuel on an already hot economy. And the people who understand this is positioning right now before this money hits. Now, why will most investors miss this opportunity? Because most investors are conditioning to react, not anticipate. By the time the CNBC or ABC, CBS, MSNBC, whoever you're looking at, it starts talking about tax refund rally, the easy money is already made. The smart money position before the refund checks hit the banks. That is how you win in markets. You see that is coming and you position ahead of everyone else. And if you're watching this later in the year, or go back and watch from the beginning, because I am going to show you or give you exact information as far as I know it to be. Now, even if you miss wave 1, there are still massive opportunities in wave 2, 3, 4, and 5. Let me get a little tactical. 4.7 trillion does not hit all at once. It flows in 5 distinct waves, and each wave creates different opportunities. You miss one wave, you leave money on the table. But if you understand the pattern, you can ride each single wave, multiply your returns. So pay very close attention, because I am about to give you the exact playbook. We are in wave 1 right now. The bill is law, but the money has not moved yet. Smart institution investors are front running the refund session. And here is what happens. Defensive sectors are starting to weaken. Utilities, consumer staples. Nobody was boring stocks when massive stimulus is coming. Growth stocks and small caps are beginning to outperform, and volatility is dropping at an uncertainly clear. And they're very, I guess we're going to have to see what the outlook is. But Where do you position? Small caps, consumer discretionary, home builders. Because in late 2016, before the tax cuts hit, small caps went up 15%. Large caps only did 6%. The Russell outperformed the S&P by 9 percentage points in just 3 months. I am definitely not a financial advisor, so again, see the disclaimer in my description. But I am telling you where I would look if I were building a portfolio right now. And small caps are at the top of my list because when money floods into the economy, small companies benefit disappropriately. They are more sensitive to economic growth. They have more leverage to consume spending, and they get ignored by most investors until it's too late. Now this is the big one. 1.2 trillion hits consumer bank accounts. The average household gets $8,400, $8,500, whatever, in your IRS returns. And I know exactly where that money is going because I have the data. It's 35% goes to debt repayment. People are going to pay off their credit cards, their bank loans, auto loans. 25% goes to discretionary spending, vacations, home improvements, electronics. 20% goes into savings, brokerage accounts, and 20% goes to rent, utilities, and groceries. So what happens? Retail stocks explode. Amazon, Walmart, Target, travel, leisure stocks boom, airlines, hotels, cruise lines. Brokerage firms rally because more money flows into investment accounts. Now Robinhood, Fidelity, Schwab, credit card companies do well despite Trump trying to cap rates. Visa, MasterCard, American Express, and there is the kicker. Once consumers spend that money, earnings go up, revenue goes up, stock multiplies and expands, more money floods into the market. It is a feedback loop, and it creates massive opportunities for investors who are positioning correctly. Now, 2008 Bush stimulus check caused a 12% spike in retail sales in the month that they were distributed. This is 7 times bigger. 7 times bigger. Let that sink in. This is not some small stimulus. This is a tidal wave of consumer spending that is going to hit the economy all at once. Now, wave 3 is a corporate capitulation, and the tax bill includes a one-time repatriation holiday. That means corporations can bring overseas cash back to the United States at a reduced tax rate. We're talking about 2.1 trillion held by US companies in foreign accounts. Who benefits? Tech giants, Apple, Microsoft, Google. They hold more than $500 billion overseas. Pharma companies, Pfizer, Johnson, Johnson and Johnson, Merck, industrial conglomerates, General Electric, Honeywell. These companies have the parking cash overseas for years to avoid U.S. taxes. Now they bring it home cheap. And what are they going to do with that cash? I will tell you exactly what they're going to do with it. 40% goes to share buybacks. That reduces the number of the shares outstanding, which means that the remaining shares go up in price. 30% goes to dividends. That is definitely great for income investors. 20% goes to mergers and acquisitions. Now that is a great investment bank. It only goes 10% to actual business investments. Now some people will complain that only 10% goes to productive investments. But I do not care about what should happen. I care about what will happen. And what will happen is that share buybacks and dividends are going to push stock prices higher. The last time we had a repatriation holiday was back in 2004. 312 billion came home. The S&P went up 15% that year. Stock tech stocks went up 22%. This um, this time is 7 times bigger. So if you're not positioning in the mega cap tech and dividend paying stocks, you're making a massive mistake. Wave 4 is bonus depreciation of business equipment and infrastructure. Companies can write off the full cost of investment immediately instead of over years. That is a massive incentive to spend right now. And we are expecting $1.4 trillion in business capital expenditures. Who benefits? Industrial companies like Caterpillar, John Deere, 3M, construction companies, Jacobs Engineering, Infrastructure Tech, Cisco, Oracle, Salesforce, energy and utility companies, solar and wind, grid modernizations. A lot of this money is going to automation, AI infrastructure, energy projects, bringing supply chains back to the United States. These are a long-term secular trend that are going supercharged by this tax policy. And the companies that provide the equipment and services for this build out are going to have massive earning growth. In 2017, when we had a last round of investment incentives, business investments grew 6% of that year. Industrial stocks went up 34%, not too shabby. And at this time, the incentives are even larger. And those trends are even stronger. Now, here's where it gets tricky. $4.7 trillion flooding to the economy is going to cause inflation, just like printing $4 trillion during COVID caused inflation. Now, the Fed is going to have to respond. But here's the twist. We're not going to get the normal Fed response. In a normal environment with an independent Fed, they would hike interest rates to combat inflation. But here, we're going to get a tax rate cut in 2026. Now, that's because Trump wants them, and he is going to appoint a Fed chair who will give them to him. After this midterms, if inflation accelerates and goes back 3% or higher, we might get rate hikes. Trump is doing everything he can to prevent that. He is lowering oil prices and taking over Venezuela. He is capping credit card rates to 10% for at least 1 year. He is trying to lower housing costs. All of these moves are designed to make you think that there is no inflation. And you are going to think gas has never been cheaper. Food is getting cheaper. Credit card bills cheaper. Nothing to see here. But the real measure of inflation is not what you pay for groceries or gas. The real inflation isn't an asset price. If the stock goes up by 25%, that's a 25% inflation. Why? Well, because salaries did not go up 25%. But people have their own who own stocks and real estate and gold and silver got 25% wealthier. So what does that mean? It means that you need to get your money into assets as fast as possible because cash is getting destroyed by the hidden inflation. And the only way to protect yourself is to own things that go up in value. Now, if you do get rate hikes in 26 and 2027, the playbook changes. Energy stocks will outperform. In 2021 and 2022, When rates were rising, energy stocks went up 65%. Tech stocks went down 35%. So you need risk management in place to take profits on higher valuation growth stocks and rotation into inflation hedges. So where do you position your money? Let's look at 6 sectors that are going to absorb the most capital and generate the biggest returns. Sector 1, consumer discretionary. Amazon, Home Depot, Lowe's. These companies benefit directly from consumer spending. And when you get that kind of return in your tax return per household, and it hits the banks, these stocks are going to fly. Sector 2, technology. Apple has a massive buyback potential. They have hundreds of billions overseas they can bring home. Microsoft, Nvidia, Alphabet. Now, these are the mega caps that will benefit from uh, this type of position. AI investment. I am still very bullish on Nvidia. I am very bullish on Alphabet. Ad revenues is going to recover, and AI is going to print money for them. Sector 3, financials, such as JP Morgan, Goldman Sachs. When corporations do mergers and acquisitions, investment banks make billions. Visa and MasterCard, despite Trump's rate cut, Charles Schwab, Robinhood, retail broker accounts are going to explode when consumers put money to work. Sector 4, industrials, Caterpillar, John Deere. These companies benefit from capital expenditures, the expenditure boom. When businesses spend 1.4 trillion on equipment and infrastructure, someone has to provide that equipment, and these are the companies that can do it. Now, Sector 5, energies such as Exxon, Chevron, Conoco, Phillips. This is a longer term play because we need clarity on Venezuela. But the oil majors are going to benefit for increased production and lower regulations. And if inflation picks up, energy is one of the best hedges. Sector 6, real estate. Tax refunds equal down payments. Super low interest rates means housing demand goes through the roof. Industrial warehouses are already doing well. Residential REITs, the smart money is buying real estate stocks before rate drops further. There is another play here. Student loans are going to get refinanced at lower rates after the Fed cuts rates. The SoFi is the #1 student loan refinancing company. When rates drop, their businesses explode. Let me give you the exact timeline so you know when to position each sector. Right now through March 2026, front runner for a refund. Small cap stocks, consumer discretionary, reduced bond exposure, buy retail stocks and travel, leisure names. This is the anticipation phase. And the gains come from being early. Late February through June 2026, the refund flood. Hold consumers discretionary. Watch inflation data closely. It might be nonsense because Trump is manipulating energy and credit cards, but watch it anyway. July through September 2026, corporate reparations by Mega Capex, Triple Q by Dividend Aristocrats. These are the companies bringing cash home and returning it to shareholders. October through December 2026. Capital expenditure boom, industrials, materials, commodities, gold and silver. I am still very bullish on precious metals, but I do have certain ones that I believe have been, one, very, very good to me. Let's just say that. And it will, I think silver, especially silver, but the long term trend is up. 2026 into 2027, watch for inflation spike. Position inflation hedge, gold, um, Bitcoin, energy stocks. They take profits on high growth tech names if inflation picks up. Now, this is the playbook. This is how you ride every wave. And if you execute this correctly, you're going to have the best year of your investment life. Now, could something go wrong? Of course. This is investment. There's no guarantees. The Fed chair Trump appoints could turn on him. Anything is possible. We have seen that before. The current Fed chair was appointed by Trump. So you can see what's going on. Now, he is a Republican, and now they're prosecuting him for printing $4 trillion during COVID. So there is always that risk. Consumers could decide not to spend. They could save everything because they are scared about AI taking out over their jobs. It's possible. But if they save this money still flows into brokerage accounts. It still props up in stock markets. Consumers, they buy stocks they have heard of, like Amazon, Tesla, Microsoft, SoFi, Robinhood, the popular names. So the money still goes into assets. You could also argue that this is already priced in and nothing is going to happen. But I don't know. When I talk to people outside of Wall Street, some friends, this and that, they have no idea this is coming. I don't know how they don't. How do I know? How does my research tell me this and they don't know? But you are now better informed than 99% of the people out there. At least I give you some ideas that maybe look into it. If you believe what I'm saying, do what do a little research and see if I'm talking any of this is true. And then if you find some of it that makes sense, look into the rest. It is possible that this could be huge, and I do believe it is. Now, here's what you need to understand. We already know it's $4.7 trillion is about to flood in the United States economy, starting very, very soon. That is 3 times the size of the 2008 bailout. That is 7 times the size of the Bush stimulus. This is rocket fuel on an already hot economy. The smart money is positioning right now. The people who understand what is coming are buying small caps, consumer discretionary, mega cap tech, industrials, financials, energy, real estate. They're riding a wave of capital flow over the next 9 months, and they're going to multiply their wealth. The people who do not understand are going to sit on the sidelines. They're not going to be able to benefit. They're going to watch CNBC talk about this rally after it already happens. They're going to, and it's going to be too late. They're going to be wondering why they missed it, and they're going to stay broke while everyone else gets some money in their pocket or rich. Depends on how much money you put out there. You do have a choice. You have a very big decision to make. You can ignore this. You can pretend it is not happening. You can keep your money in cash and watch it lose value to hidden inflation, or you can open your eyes. You can see what is coming, and you can position yourself to profit from the biggest wealth transfer in American history. It's just amazing what is possibly right here in our faces. I've done the research. I do believe that this is happening. Now you just take what I've just given you and do the research yourself to feel comfortable and have peace of mind that you're doing the right thing. Now, this is the opportunity that comes once in a generation. Do not miss it. If you found this in what that I just shared with you, um, something you like, please subscribe. I'm trying to build the show, and I'm spending a lot of time trying to do this so I can give you the best information I possibly can. So please hit the like button, leave a comment, tell me how you are positioning for this. If you've already known this information in the comment section, are you buying the small caps? Are you loading up on tech? Are you getting into industrials? I would really like to know. You don't have to get personal. Don't give me your name, blah, 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 none of that stuff. But if you're not subscribed yet, please do so. What are you doing? Are you going to go for it? Are you going to hit the subscribe button? Help me out. We're trying to build a community here. Very, very early in the stage of building this show. Serious investors who understand and want to make decent choices. I'm getting some of you out there that wants to hear what I have to say, and I do appreciate it. So please try to have a great rest of your day. Let me know in the comment section what you're going to do, or if you've already done something, and if this sounds like it's something you want to do, let me know what you do in the future. Have a great rest of your day. God bless.